About to give everybody some game, some real game. I love math, and we're going to talk a little bit about some math that makes it all worthwhile. So, first thing we're going to start with is the rule of 72. So, 72 divided by your rate is going to help you figure out what the return on your investment is. So 72 divided by the return is the number of your investment. So a 10% return will double your money in 7.2 years. Next up is the rule of 2000. So 2000 times your hourly rate is roughly your annual income. So if you're on $20 or £20 per hour, that's roughly 40,000 per year. The next up is the rule of 4x. So 25 times your annual expenses is almost as is the amount that you need to retire. So 25 times your annual expenses is how much you'll need to retire, and you should be thinking about your retirement at all times. So if you have 60,000 in annual expenses, then you need about 1.5 to retire. The rule of fourths, so your home, or I really should say your mortgage, should not be more than 4 times your annual income. Now, this isn't something that you'll be able to completely control, but you should look to have a mortgage that is no more than 4 times your annual income. The house price is your mortgage plus the deposit that you pay down. Next up, we're going to talk a little bit about buying a car. So your car down payment of 20% for 4 years with a monthly expenses no more than 10%. What that is saying in numbers terms is a $20,000 car should have a $4,000 deposit and a loan term of approximately 4 years. Now, the 10x rule, this one is important because we should all be thinking about life cover and protection. And we will go into a little bit more about protection a little bit further on. But your insurance policy should be roughly 10 times your annual salary. These are things that we need to talk about, and we're going to get into all of those things and more coming up. No one can convince me that there is a lack of financial literacy, because the truth is every bank, every financial institution, most governments, most organizations are trying to give you the information you need to be more financially savvy. Now, I've added my 2 cents. I've released a book called A Mortgage is a Really Big Loan. But don't be put off by the title. It's not just about mortgages. We're going to give you the information you need to manage your finances better. You can check out the QR code. You can order it right there. It's available on Amazon. It's a great gift if you know young people who are getting ready to go to university, or if you know people that have recently relocated to the UK and they just want to understand how the UK financial system works and they just want practical advice, guidance, and information. This is the book for you, or this is the book for them. Make sure you get it on Amazon. You'll be glad that you did. All right, let's think about this. We need to be proactive with our finances. Our finances are made up of 3 key things: our credit, our income, a deposit if you're buying a house, and protection, which is insurance. We're going to go through all of those things. And here are a few questions. Let's see if you know the answer to these things. What is the difference between revolving credit and fixed term credit? Next up, when is the last time you checked your credit report? And lastly, what are the rules of intestacy? So if you die without a will, who gets the money and in what order? There's a lot of misconceptions about those things, and we're going to just cover those things off. First bit of advice: make sure that you check your credit report at least once a year. My advice: check it at least every 6 months. Why? If there's something wrong on your credit file, you need to resolve it as quickly as possible. There are a lot of scams out there. There's a lot of identity fraud, lots of things going on. And what you don't want to happen is when you go to buy a new car or you go to apply for a mortgage, the mortgage broker pushes your application back saying you're not going to be able to get the best rate because you have credit issues. It can take up to 4 months for credit issues to be resolved. That's if it's straightforward. And that's if you get it resolved quickly. It will take a while for it to update on the credit report. So if you know about these things and you can head them off at the pass by understanding what's going on with your credit report, then you'll be able to resolve these things quickly. I've worked in finance for over 30 years, and I know more about credit than most people. I've probably forgotten more than most people know about credit and credit cards and credit reporting. Remember, it's your credit profile and not just your credit score that's important. So what I mean by that, it's how you manage your credit. One of the questions that people frequently ask is, should I accept credit limit increases? And let me caveat the answer, as I always caveat, everything is very individual, everything is very personal, and we want to make sure you're managing your credit well. But if you are trying to build a better credit profile and a better credit score, you do want to accept credit limit increases. And with lenders who haven't offered you a credit limit increase and you've had the card for more than a year, you've been paying it well, you can request a credit limit increase. Why do you want to do this? Well, think about it this way. Lenders want to know that other lenders want to lend to you. And the way that they assess this is they will look at a snapshot of what credit you have available. So if in year one, let's just say you had £5,000 worth of credit available to you, and then year two, you still have only 5,000, and year five, you still have only 5,000. Lenders will think that other lenders don't want to lend you more money or that they don't want to increase your credit limit. So by increasing your credit limit, you will actually improve, in most cases, improve your credit score. But keep in mind, it's dependent on you managing your finances well. Should I pay off my credit cards and then close the account? When people are preparing for a mortgage, I always tell people, pay off the smaller balances as quickly as you can. Don't apply for new credit. But if you're paying off your credit card, do not close the account. It will have a detrimental effect to your credit rating, because one of the criteria for assessing somebody's credit profile and credit rating is how long they've had credit. So let's just say you've had a credit card for 10 years, you've managed it well, you've paid it every month, and now you're preparing to get a mortgage. You decide to pay it off, but then you close it. If that's the longest standing credit card that you've had, when you close that, it will reduce the average time of credit that you've had, and it will therefore impact your credit rating. So you don't want to do that. Another common question that people ask me is, what is the difference between a statement date and a due date? And this is really important, especially for people that are looking to improve their credit rating. So what some people will do is they'll go out, they'll get a credit card for the purpose of improving their credit rating. They'll purchase something on it. Let's just use January, for example. So they get the credit card on January 1st, 2nd, 3rd, they go out and they put a charge on that credit card. And then what they do, because they think this is a good idea, they'll pay it off in a couple of days. You don't want to do that, because what will happen is when your statement cycles, it will show that there's a zero balance on it. What you do want to do is use the credit card responsibly, have a balance that when the statement cycles or when your statement is produced, it's showing a balance. Hopefully you've set up a direct debit. You then pay off that balance. Then it will show that you're using and managing your credit well. These are some tips on how to improve your credit score, and here are some actions that you can take. When you're improving your credit score, you do want to have access to your credit score. So I recommend Check My File. The information will be in the link, but it's checkmyfile.com. You can download your 3 bureau reports. So that's Equifax, Experian, and TransUnion all in one place. It will have all of your payment history. It will have all of the searches. And as I said, it will help you pick up if anyone's done anything fraudulently. This is very, very, very important because if someone has done fraud on your account, you want to pick it up quickly. The reason why you want the 3 bureau report is because keep in mind, not every lender reports to every credit reference agency. So by having the Check My File credit report, you'll see all 3. You'll be able to pick up everything that you're paying on. And if you have any CCJs, late payments, missed payments, anything like that. And great tip, go to Money Savings Expert. Money Saving Expert is a trusted website in the UK where you can find out about mortgages, you can find out about loans, and it has a lot of consumer information. Make sure you check it out. You'll be glad you did. Next up, question. What short courses are available to help you improve your income or your employability? What skill or talent do you have that you could monetize? So what skill or talent do you have that you could make money off? And lastly, are you using technology? Are you using ChatGPT and other AI to help improve your efficiency, improve the way that you run your business? Right now, we're going to talk about income, how to increase your income, how to start and run a business. I refer to it as startups and side hustles. The first thing you want to do if you are working 9 to 5 and you do have a PAYE job is why not ask for a raise? Now, you're probably saying, Anthony, I work in the public sector. It's not something that I can ask for a raise. This won't apply to everybody, but do keep in mind if you are in the private sector or if you're at a job where you can ask for a raise, ask for a raise. What's the worst thing that's going to happen? The worst thing that will happen is they say no. If you're a good employee and you're doing a great job and they're just unable to give you a raise, they're not going to fire you for asking for a raise. But what they will do in most cases, especially if you have a good manager, they will give you a blueprint for success. So as someone that has managed hundreds, if not thousands of people in my life over my 30 years in finance, if I had an employee that came to me and asked for a raise and I really wanted to support them, but I was unable to support them at that time, I would tell them, well, this is what you need to do. And I would give them a blueprint. So that's an informal contract with that person to say, well, these are the skills that you need to improve, or this is what you could do to get a raise. Now, you may not be in a position as a leader where you can definitely guarantee that, but certainly you would do your best to help someone get the information that they need. It may be, well, if you did this particular course, if you got this additional qualification, that would help me as a manager, help you get a raise. I hear a lot of people talk about starting a business. Let me just say, it's not for everybody. It's not glamorous. It's not this thing where you start your business based on your passion and then all of a sudden you're a millionaire. The reality is, running a business is hard. But if you have what it takes, you're persistent and you're consistent, running and starting a business can be a great way to use your skills and talents. So consider starting a business, but don't think about just what you're passionate about. Think about what the need is. Think about what need you can address and what problems you can solve. Or you may decide to do what we refer to as a side hustle. Well, side hustle is something that you can do alongside your job. You may decide that you want to bake cakes. You may want to tutor people. There are a lot of platforms out there that will enable you to use your talent and your skill outside of your 9 to 5 and provide services that you can be paid for. But keep in mind that the tax man is going to want their cut. So the gig economy is now regulated, it's monitored, and the tax man will want his cut. So if you're thinking about ways of improving your income, you want to explore gig platforms such as Upwork and Fiverr. These are platforms where you can put your services on there, and then people can put jobs on there, and you can apply for those jobs, or they can contact you directly. Another great way of improving your income, or maybe even discovering a great way to do a side hustle, is to research some short courses or certification. There are tons of certifications out there, such as Prince, so you could do project management. And a good project manager can make a really good day rate or get a job within most organizations where they'll be able to get a great salary. You could do that as an income producing first job, or you could do that as a side hustle. But don't discount yourself. Don't think that just because you're in a particular role, you cannot increase your income. And if you're looking for a mortgage, as I said, it's about your credit, it's about your income, and it will also be about your deposit. But if you have more income, you'll be able to generate a higher deposit, which means it will give you access to more houses and get you closer to where you want to be. You definitely want to consider either starting a business, starting a side hustle, or getting a pay raise where you're currently working. Another thing that people tend to underestimate, and I don't say this because I wrote a book. I wrote a book because someone introduced me to the concept of writing a book. I am a firm believer that every single person has at least one book and one song in them. I used a platform called KDP, or Kindle Desktop Publishing, to publish all of the books that I've done. I've written about 5 at this point. When I was approaching 50, I said, what is my bucket list? What are some of the things that I want to do before I leave this earth? Now, I'm not a person that could write fiction because that's not my thing. So I thought about what are the things that I'm good at? What information do I currently have that I can share with other people to add value to them and exchange my information for money through a book? So consider writing a book. Connect with me on LinkedIn and I can show you everything that you need to do. There's platforms that can help you with your writing. And as I said, you can use technology to proofread. So yes, you may read my book, A Mortgage is a Big Loan. You may read the book and pick up on a typo, or someone said that one of the chapters was off or something. But the bottom line is this: I've added value to a lot of people's lives by sharing information that I have. I speak at a lot of events and I get invited to speak at a lot of events. I like to give back, especially to young people. So sometimes I'm invited by nonprofits or not-for-profits to speak at the event. Now, I do prefer to be paid for my time, but in the event that they're unable to pay me my time, I always need my travel expenses. But if they're unable to pay me for my time, one of the things that I do is I would say, well, in order for me to speak, I need my travel expenses, plus you need to order X amount of copies of my book. Then the book becomes the textbook or the thing that you talk about during the conversation with people. So if you've never thought about it, think about it now. Think about writing a book. If you have thought about it, make sure you reach out to me. I can show you all the tools to self-publish a book. I do have support mechanisms. I even have some AI that will help you write your first book. And if you've already written a book, why not write another one? Writing a book can be a great way to increase and improve the value that you bring to people, and also just one of those things that you can tick off your bucket list. Question: who here knows what a lifetime ISA is? A lot of people ask, can I get a mortgage? During the mortgage, people will often ask me, why is the bank asking so many questions? And how much does it cost to buy a home? Not just the deposit, but the other costs involved. We're going to go through that right now because these are great questions and these are also important questions. So first up, this is why a lot of people are listening right now. Can I get a mortgage? Yes, you can. It's very rare that I speak to someone and they cannot get a mortgage. There's a difference between being able to get a mortgage and potentially getting the amount that you want for the home that you want. But in most cases, people can get a mortgage. So don't listen to your cousin, don't listen to people from wherever you're from that have come here and gone through the process. Speak to a mortgage advisor. Speak to someone that's going to give you the factual information and answer your specific questions and tell you how much you qualify for. But let's go through some of the things. The first thing is, how much do you earn and how is your income made up? So are you self-employed? Are you full-time employed? Are you part-time employed? Do you get benefits? All of those things are important. So the lender is going to want to understand where you get your money. One of the things to be mindful of, I know a lot of hardworking people that have more than one job. Not every lender will accept a second income. Some lenders will only accept one income. Some lenders may accept a second income as long as you've been there for 6 months plus or 12 months plus. Some will accept a percentage of that income. So just be mindful. If you have a full-time job and a part-time job, that's great and that will help you. And, hats off to you for working hard. But when you're speaking to your mortgage broker, they may advise you that, yes, your first job you're making 30, your second job you're making 10. It doesn't mean that the lender will view that as £40,000 per year. Also, lenders are smart. So don't think you can go get a job for, a month and a half and then add that to the application and the lender's going to say, yeah, we're going to take that. Lenders know that some people will do that to boost their income. This also applies to commissions and bonuses. Some lenders will not accept a bonus unless it's a guaranteed bonus and they've seen you receive it for several years or a couple of years. So your income is very important. The other thing that's very, very, very important is, what is your visa status? So if you have a UK passport and you're applying for a mortgage in the UK, then it's pretty straightforward. But what if you have right to remain? What if you're on a skilled worker visa? Well, none of these things will rule you out, but it does change the criteria. I do a lot of mortgages for people that have skilled worker visas. And yes, I get them mortgages. One of the bits of pushback that I often get is, well, Anthony, you've given me this particular interest rate. All my friends are telling me that there's better rates out there. Keep in mind, every mortgage is different. Every situation is different. And the rates for people on skilled worker visas might be a little bit different than the mainstream rates for both people with a UK passport. Or what happens quite frequently, I have lenders who maybe have a lower rate, so your high street lenders, Halifax, Barclays, who will do the deal as long as the person has been in the UK for at least 3 years and has enough time left on their visa, but they won't lend as much. So you might find that the high street lender will lend you the money, and one of the other lenders that specialize on skilled worker visas will lend you the money, but the people that specialize on skilled worker visas will lend you more money. So that might be why I or another broker take you to the other person, because you needed more money to buy the house that you want. We spoke a little bit about credit. It's your credit history. So don't get just caught up in the credit score. Yes, the credit score is very important. And usually the credit score aligns with a good credit history. But think about things like, have you missed payments in the last 6 months? Have you had any late payments within the last 6 months? So quite frequently, I have clients that have a high credit score, but maybe they've had a late payment in the last 3 months. That will impact which lenders will lend to you. Also, things like CCJs. A CCJ is a county court judgment. Is it satisfied or unsatisfied? So if you're checking your credit report every 6 months, you should know if you have these things. You should know if it's satisfied or unsatisfied. If you do get a CCJ, what you want to do is make sure and satisfy it. There's lots of lenders, especially if it's with a utility bill. A lender kind of will exclude that if it's a satisfied CCJ and it's with a utility company. So don't just ignore it. Don't think that it will go away. Defaults, CCJs, even repossessions. There are lenders that will lend if you've had a property repossessed in over 6 years. There's some that you don't even have to wait the 6 years, but the LTV or loan to valuation will be a lot lower. So they're not going to do a mortgage at 5% and possibly not even a 10% deposit. A lot of them are going to need at least a 25% deposit to kind of get past the fact that you've had a repossession in the past. I've worked in banking for 30 years, and 10 years out of that 30 years, I actually worked in pre-litigation and debt collection. And I can assure you, banks do not want to foreclose. Banks want to lend money. Let me say it again. Banks want to lend money, but they have to lend responsibly, and they have to make sure that you can not only borrow the money, but you'll be able to keep up your mortgage repayments. So this brings me on to the next point. When people say to me, banks don't want to lend, that's a myth. It's a lie. It's not true. Of course, banks want to lend. Banks are in existence for the purpose of lending money, but banks need to lend responsibly. So banks need to know that the source of income is legitimate, the source of the deposit is legitimate, that you can maintain the payments, that you're not going to retire during the course of the mortgage, and if it is going beyond retirement, that you have a pension in place. One of the considerations that they're going to look at is it a joint application, meaning two people, or is it a solo application? I need to explain this to people. If you do a joint application, both individuals, if it's two people, on that mortgage are both individually and jointly responsible for the monthly payments. What do I mean? All right. So if you and your partner take out a mortgage and the payments are £1,000 a month, and you decide you're going to pay 500 and your partner's going to pay 500, the bank doesn't care. They just want their 1,000. So if one of you loses your job or one of you decides that you're not going to pay anymore, you cannot go to the bank and say, well, my partner's not paying his part. Let me just give you my part. A joint application means that both of you need to meet the criteria for that mortgage. So a good rule of thumb is that the criteria will be based on the worst person. So the person with the worst credit profile, or the person with the, that doesn't have the UK passport or whatever, they're going to take those things into consideration. And that's going to be one of the ways that they determine what the loan to valuation is. There's a common myth out there about percentages. Oh, 5% down, 10% down, 15% down. A 5% mortgage does exist. It's a little bit more challenging. There are even 100% mortgages out there right now. So there are lenders who will lend 100% of the mortgage. But these are all things that are for perfect clients, UK passport, PAYE, those type of things. So they do exist. But the best bet is to speak to a mortgage broker. A mortgage broker is going to deal with lots of different lenders. And as long as you're open and you're honest with your mortgage broker, they'll be able to give you the best advice. They'll be able to show you what they're giving you and explain why they're giving you that particular product. We talked about the credit profile, but I'll say it again. If you have CCJs, if you have defaults, if you have repossessions, don't rule yourself out. It is still possible to get a mortgage. You may need to go to a specialist lender, which means the rate may be a little bit higher, but you certainly can get a mortgage if you've had a CCJ, default, or repossession. If you've had late or missed payments, you can still get a mortgage. It may rule out some of the top tier lenders, but you still will be able to get a mortgage. And another consideration is what they call debt to income ratio. So I had a client a couple months ago who's on a decent salary. They pay their bills every month, never missed a payment, never any late payments. But just for the demonstration purposes, the individual was on a £50,000 a year salary, but their debt was about $65,000. It was above their income. whilst they had a decent credit rating and they hadn't had any missed or late payments, the lender would not lend to them because the debt to income ratio was too high. That particular lender wouldn't lend to them. We did look at other lenders, but most lenders would, based on that debt to income calculation, most lenders were looking for at least a 15% deposit. So think about your credit profile. Every time you're applying for credit, anytime that you have a bill that comes through the mail that's due, make sure that you are on top of your credit profile. Make sure you're not missing payments. Make sure you're not making late payments. Make sure that you're checking your credit report so you don't get any nasty surprises if and when you apply for a mortgage. The other thing that banks are going to ask, and it's not because they're being nosy, is where did the deposit come from? Okay, is the deposit being gifted? In other words, do you have a rich uncle? Do you have a parent? Do you have a family member that is gifting you the money? That's fine. But do consider some lenders will only accept gifted deposits from direct family members. So that would be, a sister, a brother, a parent. Some lenders will take it from anyone that will lend you the money. But when someone is gifting that deposit to you, they're going to have to prove where that money came from. Banks want to make sure that they can determine the source of the deposit. So if someone is gifting you a deposit, tell your broker early that they can go to a lender that does accept gifted deposits, and they can look at the criteria, because you will find that some lenders accept gifted deposits, but they don't accept the full deposit as a gifted deposit. They want to know that the individual has some skin in the game. They want to know that the person who is borrowing the money has saved some money towards the purchase. So gifted deposits are fine, but make sure you let your broker know about the gifted deposit early. Make sure that the person that is gifting the deposit is willing to provide their bank statements, and they will need to sign a gift letter. So it's a gift and not a loan. I am going to touch on something which is point 3. Listen, my parents are Jamaican, and a lot of Jamaican people that came over during Windrush used to do something called a partner. So a partner is one of those cultural things that with the Jamaican community, what would happen is, let's just say you have 5 people that are in this partner each week or each month. Let's just say each month to make it easy. Each month, everybody would put in £1,000, and each month someone gets that £5,000. I know that in some communities it's called rounds. These things are a great way to save, but banks do not like that. Let me say it again. Banks do not like to see multiple payments coming in from multiple sources into your bank account. Furthermore, and this is a discussion that I've had with several people, keep in mind, it's not a gift. Some people, when I'm doing their mortgage application, they're like, oh, it's a gift or it's my money. It's a loan. It is a loan, which means you have to pay it back. So if you're in the partner or if you're in rounds, that £5,000 that you're getting is your money anyway, because you're in it for, let's just say, what we call hands in partners. You're in it for 5 hands. So you've put in 5,000. But the great thing about it is it has given you access to that money sooner than you would have otherwise had it. But banks do not like rounds. It's hard to explain. It's hard to get over that hump. It's not impossible, but if you can avoid it, do avoid it, because that same 5 months that you're putting in that 1,000 a month, you could have just put that in a high interest savings account. And A, the bank would see that you're saving that money each month. And B, you'd actually get interest on it. So you'd actually be better off putting that in a savings account than, circling it around and potentially ruining your opportunity to get a mortgage. Crypto is another thing. You can use crypto towards your deposit, but you'd want to let your broker know that in advance, simply because some lenders don't accept crypto. And if they do, there's a much higher threshold of due diligence that they're going to take you through. And proof of the origin of the money, as I said, you want to make sure that you can prove the source of the money. So in most cases, at the very first stage, banks are going to ask for 3 months bank statements. If they think something isn't right, they may ask for 12 months bank statements. So don't think that you can trick the bank by saying, I'm going to do the rounds and then I'm going to get the money in the account and then I'm going to get the 3 months bank statements because I know 4 months out is when the money came in. You may run into problems because you may end up being asked for 12 months and then you're going to have to explain why you said that the money was yours, but in fact, it was something that came from rounds. There's something called open banking. So banks, with your permission, can see what you're doing with other banks. We do go through your bank statement. So we will look and say, well, who is Jane Doe and Jack Smith and Frank? Why are these people putting money in your account? So when you're building your deposit, the best advice I can give you when you're trying to build a deposit for a home is open a high interest savings account, which in 9 times out of 10 will not be with the high street. So it won't be Halifax, it won't be TSB, it will probably be an online bank. I mentioned earlier that you can go to Money Savings Expert. These are reputable organizations. These are banks that are protected. You have the same protections as the high street banks. It's just because they can give you more interest. So open a high interest savings account each month or whenever you're paid, put some money in that account. The bank will see that, the lender will see that that money has been built up. And then it's easy to use that money for your deposit. So that's how you will show where your deposit came from. Additional costs. Oh my goodness. Additional costs. This is one of my favorite topics. And sometimes it's a little bit scary for people. And sometimes it can be one of those things that they have the conversation with the mortgage broker and now they're disheartened because you're talking them through the additional costs that maybe they did not consider. One of the first things that I tell people is the deposit. So the money that you're paying down on the house, although at the beginning of the process, you do need to provide proof of deposit, that money for the deposit towards the purchase will not come out of your bank account until about 2-3 weeks before you get your keys. The average mortgage is taking 4 to 6 months right now. And 50% of mortgages don't happen. So either the seller pulls out, the buyer pulls out, various things happen. So your deposit is really, really important. But that's just one thing that you need money for. You're going to need money for stamp duty unless you're below the threshold. But there is a government website that you can go on, key in the information, and check to see what your stamp duty is going to be. You're going to need to pay a solicitor. So the solicitor fees are going to be determined by the price of the property, if the property is freehold or leasehold. Leasehold properties are going to cost a little bit more. You're going to need to pay your solicitor. You're going to need to pay your broker. If you go directly to a bank, banks don't traditionally charge broker fees, but when you go to the bank, you're only speaking to that bank. So particularly if you have a skilled worker visa, you may find that the bank says no. So they're not saying that you're a bad client. They're just saying that within their criteria, maybe they don't lend to skilled worker visas, or maybe you haven't been in the country long enough, or maybe you don't have enough time left on your visa. But you're going to need to pay a broker if you go into a broker. There's product fees. So a product fee would be the particular mortgage that you're taking out may have a product fee. Sometimes they don't, but they usually are about £1,000. So that's what the bank is going to charge you to take out that particular mortgage. I always advise that clients add the product fee to the mortgage. And the reason why you should add the product fee to the mortgage is because product fees are non-refundable. Remember earlier I said that 50% of mortgages don't go through. So that means if at the onset you pay that product fee when you start doing the full mortgage application and you change your mind or the other person pulls out, you won't get a refund on that. So I always advise add the product fee to the mortgage. The downside is you pay interest on it. But the way to get around that is when the mortgage completes, you contact the lender and say, look, I want to pay an additional £1,000 or £1,500, whatever that product fee was. But keep in mind, the additional costs are money that you need to have. If you're paying your deposit out of a lifetime ISA or some type of ISA, like a help to buy ISA or whatever, keep in mind they're not going to give you that money. The bank doesn't give you that money. That money will go directly through the solicitors for the purchase of the home. So the additional cost that you need to keep in mind when you're purchasing a home is the stamp duty, solicitor, broker, product fees, valuation, and moving. So valuation is where the bank that is lending you the money is going to value the property. They're going to say, we think it is worth X. And there can be three outcomes from that valuation. Valuations will range depending on the price of the property. Some products, some mortgage products will come with a free valuation. But when that valuation is done, there's essentially three outcomes. Outcome number one, they value the property at the amount that you agreed to purchase the property for. So you found a property, you've negotiated, the seller's selling it for $500,000, you start the mortgage application, you key in that it's $500,000, the lender goes out, sometimes they do what's called a drive-by valuation, or they could even do what's called a desktop valuation, where they just can key it in because there's a lot of houses that have been sold in that area, and they'll say, yes, we think it's worth $500,000. The other outcome could be that they think it's worth more than $500,000. Great result. But if they come back and say that they feel that the value of the property is lower than the $500,000, that's where you have a problem. So you'll need to speak to your mortgage advisor and adjust the mortgage amount. And that's why it's important not to purchase right up against your maximum borrowing ability, because if something like that happens, it may mean that the deal completely falls out of bed. So those are some of the additional costs to consider when you're getting a mortgage. Action. Speak to a broker. Don't wait until you think you're ready to speak to a broker. I offer a free mortgage capacity analysis report. So if you contact me, the link will be in the description. I will actually do a full mortgage review for you and tell you and show you how much you can get. Even if you're not ready to buy now, you should speak to a mortgage broker at least 6 months before you're ready, because there may be some things that you can tidy up. I had a client about a week ago now, and he actually did a really good review for me where I could have gotten him a mortgage right now. But based on some circumstances he had, I said, listen, if you wait until January, you will have way more lenders that will be able to lend to you. So yeah, if you absolutely need to purchase now, if you're going to be homeless, or yes, I can get you a mortgage now. But I think it would be better for you and your family, if you can, for you to wait until January. You're going to have more options. You're going to have more choices, which means with more options and more choices, we'll be able to find you a cheaper mortgage. He wrote a great review saying, you know what? I didn't think a mortgage broker would do something like that, because I told him, look, I could take your business now, but it's better for you and your family to wait until January, which is about 6 months from now. Clean up your credit. So if you have small balances on credit cards, make sure that you pay them off. Make sure that you don't have lots of things out there, and stop applying for credit. Do not apply for any more credit while you are looking for a home. Even once you've started the mortgage application, don't apply for any more credit. All right. Get in your new home, and you might find that you need things. And a lot of people don't realize that when you get your new mortgage, 9 times out of 10, your credit score will drop. And it drops for 2 reasons: because you've just taken out this huge loan, and also because you will change address. Unless you're purchasing from a landlord for where you're currently living, you're going to change address. So that is going to impact your credit score. Tidy up your bank account. Banks will go through your bank statement with a fine-tooth comb. So you want to make sure there's not random things on there, silly things. I had a young man that I did a mortgage for where he had loaned someone money, and when they were paying him back into his account, they put a really horrible reference on there, and the bank will question those things. So tidy up your bank account. If you have any direct debits that you no longer need, cancel them. We want to get you the maximum affordability, that you can get the maximum mortgage amount that you can afford. And review your mortgage and equity. So, like, let's just say you already have a home and you may have some equity. Look at it, see what things you could do potentially to invest, or to do home improvements, or to help, a child onto the property ladder. There's lots of older people that have homes that they've lived in for a while, they have equity, and then they have young people that are struggling to come up with a deposit. Your home is going to be their home when you pass. Let's just face it. So why not use some of the equity in that home right now to help them get on the property ladder? These are some great action points. I hope that you follow them. Question. And now we're closing out on one of the topics that I'm most passionate about. And this is about protection. I'm not here to sell insurance, but I am here to tell you, as someone who's worked in finance for over 30 years, I'm going to let you in on a secret. And it's not actually a secret. We will all die at some point. You, me, all of us. We're going to die at some point. But what happens when you pass? What happens to your property? What do you have in place? So at your job, what is your death in service benefit? You would be shocked, or maybe you wouldn't, but most people that ask that question have no idea what their death in service benefit is. But keep in mind, your death in service benefit with your employee is with your employee. Most people aren't going to retire from the job that they're working at right now. So you do want to have something that is attached to you and not just the job. Because when you leave your job, you leave that death in service benefit. What percentage of people in the UK have a will? Less than 50% of people have a will in the UK, which is shocking, and it's sad, and it should not be so. I asked about the rules of intestacy. So don't think that you will have what you want done after your passing. Don't just assume it will happen the way you want it to happen. Make sure you have a will in place. A will is not just about stuff. A will is also about your kids, and it will also make sure that the sentimental things that you have go to who you want them to go to. A basic will is very affordable, and if you're a human being and you are living, it means some point you're going to die, which means you need a will. When you're purchasing a home, that is a great time to make sure that you review your will and update it, or take out a will. So as part of most brokers' service, they will connect you with someone that can write a will, whether it be a joint will or a single will, but make sure you have a will. How many months could you survive if you were to lose your job right now? If you're like most people, not very long. But yet, when I speak to my clients about getting income protection or getting critical illness cover, everybody's like, oh, I'll live off my savings. I know that's not true, because you just used all your savings to purchase the home. So when someone is talking to you about protection or insurance, don't look at it as they're trying to get money out of my pocket. As a broker, I've already done a full affordability assessment. My insurance team will talk to you and see what you already have in place. We're just there to bridge the gap. So if you are off work for 3 weeks, 4 weeks, 5 weeks, 6 weeks, that means you're not getting paid, but you still need to pay your mortgage. If you're off work for 4 months, what are you going to do? You've just spent all of your life savings in purchasing a property, and it's really hard to replenish those savings. So have the conversation about income protection, so that will extend your sick pay, critical illness, because depending on what statistics you look at, either 1 in 3 or 1 in 4 people are going to have a brush with cancer in their lifetime. The critical illness cover is going to make sure that if you are diagnosed with a critical illness, then you get a payout. So then you can focus on getting better. And with the technology that is available now, people are surviving, people are living longer, and they're not going to ask you for the money back. So you get the payout upon diagnosis. So make sure you have a in-depth conversation with your broker or with whoever is talking to you about the insurance. Know your employee benefits, as I said. A will isn't just about stuff. Life cover, critical illness cover, and income protection are vital. Think about your family. Think about your legacy. I hear so many people, especially in the Black community, and they say something that frustrates me. They're running around talking about legacy and how difficult it is for them and how other people and other ethnicities have the advantage because they've been given advantages. And then I'll say to them, do you have life cover? Do you have income protection? Do you have things that will make you worth more dead than alive? And that's a horrible thing to say. But my job as a father and as a man is to make sure that when I pass, my daughters, my grandkids, and future generations benefit. So it's important that you put these things in place. Insurance does pay out. Don't believe that myth. As long as you've had a thorough review and you've selected the right products and you've been honest, insurance does pay out. Insurance is one of the quickest ways to build generational wealth. So if you're one of those people out there running around talking about reparations and you don't even have life cover in place, you're not a serious person. I'm not here to sell insurance, as I said, but I am here to have a serious conversation about how you apply some basics of financial literacy. In closing in this topic, what I would say is when you do put your estate plan together, make sure that everybody knows what everybody knows. What I mean by that is I have a daughter. I had my first daughter when I was 17. My daughter now has kids. I recently got married, like about 6 years ago. So I have another daughter. So my oldest daughter knows what I have discussed as far as my estate planning. In fact, I put an email together, sent it to my siblings, sent it to everybody that's involved in my will, that everybody knows what everybody knows. As a bank manager, it was very, very sad when we had to register a bereavement because 9 times out of 10, sisters and brothers and nieces and nephews, everybody's arguing. And sometimes, not often, but sometimes it's not even about the money. It's just about the lack of communication. I know that there's a lot of people that will look at this and say, well, when I'm dead, who cares? But is that the legacy that you really want to leave? We want to make sure that you have the information that you need. So hopefully we've covered off enough things here that you can review this video again, you can share it, but you cannot make the excuse and say you never heard it or didn't have access to it. This information is readily available from me, from your bank. You can purchase the book, but what you want to do is make sure you take action. So get a will or review the will that you currently have. Store your important documents in a place where people know where it is. Another thing that happens with wills is people have wills and no one can find the will. So make sure that you store your important documents in a place where the right people know where it is. And if you're a man, make sure you get a prostate check. So a PSA check. Prostate cancer is something that affects a lot of men, and it is one of the most treatable cancers if detected early. So make sure you're taking care of your body, make sure you're taking care of your family, and make sure that you're taking care of yourself. It's been a pleasure, and I hope that everybody will connect. Make sure you like, make sure you subscribe, make sure that you comment, and make sure that you share. Financial literacy is vital, and it's one of those things that will not only help you, but help generations to come.